on that low to the objective that you think is where it's going to go to, which is that 41.19.5. This range, that's an implied dealing range. It has not yet materialized. Your analysis is implying that if this move occurs, if it delivers that move up there, at certain points within that range, there should be some measure of new reaccumulation. Meaning, here's 75% of it, here's 50 and 25. So first quarter of the range between this low and that high is here. So we have an expansion there. So nothing really starts outside of what we've already seen here. Then it runs, and then we have 50%. Isn't it interesting that we saw all of the consolidation, which is exactly what's in my core content lessons. Look at grading price swings. That's what I'm doing here. I'm doing this, but I don't have the luxury of time to do all this explanation while these 1 minute candles are painting. So I annotate certain things knowing that I can come back and fill in and amplify your learning with all the things that I've already taught you in conjectured lessons that were in hindsight and never work in real time. No, with real logic that's in those lessons that I keep using constantly in front of you. If the logic is flawed, this stuff wouldn't work. If I'm a fraud, I couldn't do it in front of you. And I'm doing it live. Everybody asked for this forever. I didn't want to do it. No, I'm doing it. You got until the second week of November. If you waste the opportunity, it's on you. You wasted it. But the consolidation happens in equilibrium, which is this 50% level. Look how much it spent time around there. Accumulating what? New longs that you have to manage as part of your open position that starts down here. Or maybe you did it on this volume imbalance down here we watched live too. Depends on what where your entry would have been. You're going into this so that way you can record it and take these moments and add pseudo experience for your journaling. But the logic is the consolidation is midway between where you think it's going to go to. That's the target. So it consolidates at that 50% level. That's equilibrium and where it will consolidate. So you can anticipate longer periods of time distortion. Ooh, what's that? Where the market just continuously moves sideways and every little PD array that would otherwise be utilized in other times, like when the run is occurring, you have to take away some of these candles. Okay, take some of these candles away and just ignore them because every one of these candles are inside of the range from this high to that low. So we don't need to see all of them. What's the defining range high and low? This high, that low, and that high. What is the PD array that should support price? Fair value gap. The bodies are supporting it. Did it close below it? No. Did any other body close below the low end of that fair value gap? No. So what is it suggesting? It's accumulating what? New longs. So it's allowing smart money to accumulate their long positions in here, and then we wait for the market to trade higher, displace. That means a short-term high taken out. That's also qualifying and confirming that order flow is bullish. You don't need a DOM. You don't need book maps. You don't need heat maps. You don't need any kind of indicator stuff. Something else to look at. Volume imbalance I noted, and then when we gapped with this opening price here, I said, this is another volume imbalance, watch that one. And then we opened here, I said, now we want to see price support this. And then it's in the video, folks. Go back and listen to it. It'll be there, I promise. Then it rallies and accumulates more. Then we have a volume imbalance right in here. Look at the bodies. Look at the body. Extend forward. Look at the bodies. It's referring to that imbalance right there. See, you're looking at, oh, this is that classic support resistance stuff. It goes much deeper than that. It's not supply and demand, and it's not support and resistance. It's algorithmic price delivery. These little gaps, these little volume imbalances, you need to be aware of them because they can be your entry or they can be your target for partials or terminus. Whatever you feel that is your model, it's one little piece in that cog that's your model or that trading plan that you're in the process of developing for yourself that you uniquely trust and follow. It doesn't matter if anybody else agrees with it. It's what makes sense to you. And then at the final 0.25% up here, the order block I outlined, in my mind, when I'm watching price, I'm thinking we're about the upper 0.25%. So that means it's going to be the biggest, quickest, sudden move in this area. It's not likely to do what? Take sell stops. You don't want to anticipate in the upper portion a move dropping down to take sell side. It's not going to do that because it's going to be in a hurry to get to the liquidity that would otherwise be pulled from the market. If it retraced, traders that might be short might be thinking, okay, I'm just going to get out there because it might come back and get my stop. That allows them to pull their stop loss above that March 6th high. They don't want to do that. So the algorithm is coded to allow for no deep retracements at the 25%, upper 25% mark. And you're seeing that run into the order block that doesn't go outside of the order block body at all, or candle. It went down into it, yes, accumulated more, and then straight shot right up into March 6th high. Find that in books. You won't. But you're going to have all kinds of amplifications of this in mine. When my books hit the market, you're going to see all kinds of shit that you never thought you saw ever before. As precise, the logic behind it, all that stuff. And I'm doing you the best service in the world by proving it right here in front of you. This stuff works. It's scientific. It's technical science, baby. We do it like nobody else. And nobody else can come close. And I don't care who you talk about, who you mention, they're not going to come close to this. And this is the easy stuff. We have all kinds of stuff coming later in the year that's extremely precise. And I can't wait to share it. Can't wait to show it to you, live charts. And I can't wait to see your excitement, the feedback, and the, well, shock and awe. Look at the body there. Look, see how it reacted off that volume of balance low? See that right there? It opened there and immediately rejects. Where's sell side at? Below here and here. And a larger pool of liquidity resting right below here, which is also what? The old equilibrium of that implied dealing range. A dealing range that's implied is basically what you're trying to target. Everything that everybody else says, you can't try to predict the market. They say,